Traders face specific problems, deciding when to open a trade, where to enter, and what stop loss to use. They also struggle with when to take profit, where to set take profit levels, and how to avoid doubting every decision. These issues make trading difficult and stressful, often leaving traders unsure of their next step. In this video, I'll explain trading with simple rules. I'll provide exact buy and sell signals, including a stop loss and take profit levels. This method improves results and reduces stress. Watch to learn the steps and apply them to your trading. We're looking at Bitcoin on a 1-minute time frame, and a sell signal appears on the chart. The signal tells us to open a sell trade. The stop loss level is already drawn as a dashed line, so we set a stop loss at that exact price. This protects us if the trade moves against us. Then there are 3 take profit levels displayed. These are specific prices where we can exit the trade for a profit. I'm choosing the third take profit level, TP3. So when the price reaches TP3, we close the trade with a 17% profit. All these levels, stop loss and take profits, are calculated and shown by the tool, so we don't have to figure them out ourselves. The tool doing this is Flux Charts SFX algo. I'll explain how to add it to the chart soon, but before that, let's go through more examples with details. On the 5-minute chart, another sell signal shows up. The stop loss level is marked, and we set it there to limit our loss if the trade fails. The take profit levels are also provided. When we enter the sell trade, the price hits the selected take profit, giving us 23.6% profit. Looking back in the chart history, a buy signal appears with its stop loss and take profit levels. Entering that trade at the signal and exiting at the take profit earns 18.3% profit. Earlier, a sell signal with its own levels resulted in 30% profit when we close at the take profit level. Then, another buy signal before that gives 16% profit. Across these 4 trades, the profits added up to 87.9%, all based on the tool signals and levels. Alright, here's something I tried with this indicator that I think you'll find pretty useful, especially if you're just starting out or trying to get consistent with trading. I took the Flux Charts SFX algo and ran it through a backtest of 100 trades, keeping all the settings exactly as they come. No tweaks or changes. After going through every trade, the results show a 70% win rate. That means out of 100 trades, 70 hit their take profit levels before touching their stop loss. For a tool straight out of the box, that's a solid number to work with, and it's something you can actually use to build confidence in your trades. But here's where it gets interesting. That 70% isn't even the ceiling. The indicator has room to perform even better depending on how you use it with your trading account. I'm going to break down more about how it works and what you can do with it, so stick around. Alright, let's dive into the settings for this indicator, Flux Charts SFX algo, and I'll walk you through it step by step so you can see exactly how it works, especially if you're new or still finding your footing in trading. In the indicator settings window under the input section, you've got a spot called Trading Style with 3 choices: scalper, day trader, or swing trader. I'm picking a scalper here because it pumps up more signals on the chart, which is perfect if you're looking to catch quick trades. Next up, there's trend length option, short term, medium term, or long term. I'm going with the short term since it zeroes in on the latest price moves, giving us that fast analysis scalpers need. It's all about staying on top of what's happening right now. Then we've got sensitivity, and this is where it gets cool. There's an AI sensitivity option. If you turn that on, the tool picks the best sensitivity number for you, so you don't have to mess with it. But I'm keeping it manual and setting it to 2 with the AI off just to show you how it works. After that, for the take profit, I'm setting that TP method to volatility. This uses something called volatility bands to set your take profit levels, and these levels adjusted based on how wide or calm the market is. For a stop loss, I'm choosing the key levels method, which uses pivot points. Those are important price spots on the chart to place your stop loss. The default settings are solid here, but there's one tweak. Make sure the volatility band option is enabled below these. Those bands shift with the market, spreading out when the things get choppy and tighten up when it's quiet. Okay, And in the Style tab, flip on the upper and lower band so you can see them on your chart, leaving everything else as is, and you're set. Want to see how this plays out in real trades? So let's keep it rolling with how this works in real trades, because that's what you're watching for, right? On the screen you're seeing chart with two lines, the upper volatility band and the lower volatility band. These bands are your guideposts, showing where the price might stretch or pull back. Now, pay close attention here. We're not jumping into a trade the second the indicator flashes a buy or sell signal. Instead, we're playing it smart. Check out this buy signal on the chart. You see it right there, but we don't rush in. We wait for the price to break past the upper volatility band. When it does, like you're seeing now, that's your cue to open the trade. Why? It's a sign that the price has a real momentum. So the price breaks the upper band at the buy signal, and we're in. Where do you set your stop loss to stay safe? You've got choices. The level the indicator gives you, the most recent swing low, or even that lower volatility band. Pick what looks solid for you. Now for the target, where you're cashing out, the indicator might show a take profit level. Or you can try this. Set it twice the distance of your risk. So if your stop loss is $10 away, go for a $20 profit. It's a straightforward way to keep things balanced. Here's how we dodge those trades that go nowhere. Look at the sell signal on the chart. It's there, but the price doesn't break below the lower volatility band. See that? We skip it. That's how we filter out those choppy, ranging markets that can mess with your account. The price just sit there. No breakout, no action. So we don't trade it. Easy. Take a look at this next example. You've got a buy signal popping up on the chart, but the price doesn't break above the upper volatility band. See that? It just hangs there. So we filter it out, no trade. But right after that, check out the sell signal. The price drops below the lower volatility band, and that's our sign. It's a valid sell trade now. That's what makes this approach a trend following strategy. It's built to catch moves with real direction and skip those sideways markets that can trip you up. Now let's scroll through a few more examples on the screen. Here's a sell signal, but the trend's pointing up and the price doesn't break that lower band. What do? Pass on it. Then there's a buy signal. Same deal. Not enough momentum to break above the upper band, so we skip it. The next sell signal, filtered out again. But hold on. Look at this buy signal coming up. The price punches through the upper volatility band and bam! It turns into a super profitable trade, hitting the second take profit level. That's the kind of setup you want to watch for. Now to show you how solid this can be, I ran the system again on the same chart, testing it over 100 trades. And the results, an 82% win rate and a 323% return. That's pretty impressive, right? It's all because this strategy stays precise and sticks to the trend. If you're curious about grabbing the flux charts SFX algo indicator to try this yourself, just head to the link in the description or pinned comment below. See you in the next video.